JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 17th of July 2020, so yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, jumping into this figure very quickly. Now, of course, this website is indicating that there is 13,800,000 and a bit thousand people infected, but some other cases, some other websites are showing a little bit of a larger number of cases, and we're very close to basically 14 million, so just shy of a few thousands. But the sad part is that yesterday we had another record surge in total amount of cases, and well, I mean, of course, it's not really looking great. That's not really kind of sparking any kind of hope for this pandemic to kind of ease off soon. For now, basically, of course, the U.S. is leading the way in terms of infections and in terms of total amount of deaths. So it's only followed by Brazil and India, and the same. Well, actually, it's like this different story here in terms of total deaths. Brazil is in second place, but however, UK is in third in terms of total deaths, even though India has more cases. Still, UK is in third in terms of total amount of deaths. So of course, don't get me wrong, I mean, statistics is something that is sometimes questionable, but nevertheless we're going from the information that we have, and it is how it is, and yes, that's basically the situation right now. Now let's jump into the markets and see how everything's kind of reacting to this whole pandemic issue. Now you can see that Nikkei 225 here today drifted lower, ended the day in slightly in the red, and however it still remained above this short-term upside support line taken from the low of the 15th of June. And if we look at the weekly chart very quickly, you can see that index still managed to kind of end the week in the positive territory, so that gives a bit of hope for the buyers going into next week. But again, we're going to be very careful, and we're going to keep an eye on this upside line, and of course we're going to keep an eye on today's trading activity in Europe and US, because if those indices decline sharply today, and if, let's say, the US will drift to the downside, then, well, I mean, will the cash indices, the futures on Nikkei might kind of drift lower as well, and basically on Monday we could be getting ourselves an opening gap here to the downside. But again, that's only in the scenario if the US indices will drift heavily to the downside tonight. So yep, we'll keep an eye on down. For now, of course, from the technical side, the fact that the price is still balancing above this upside support line is still seen as a positive, and yep, we could see this one rebounding and pushing higher. But like I said, a lot of things will depend on how today's trading will end up being. Now, jumping into another interesting Asian index, and that's Shanghai Composite. This one still has a bit of time to run. Basically here it's not really looking good. Yesterday I talked about this index, and what I was saying that in a way, if it manages to stay below this 3,288 territory, then, well, I mean, further declines could be possible, and this is exactly what happened. The index drifted lower, closed well below this 3,288 territory, and tested this 21-day EMA. Today we're seeing a bit of a a bit of sideways activity, I would say. However, it's still slightly in the red, but the most interesting fact here is that the 21-day EMA is currently acting as a nice area of support, and the index is basically struggling to push further south. Of course, like I said, we do have still about 15 minutes left of trading, and well, yesterday when I was covering Shanghai Composite, we were still in the morning when I was covering, and we were still having around 15 minutes left of trading in this index. The price was balancing near this 3,280 territory, and look what happened in the remaining 15 minutes. It declined heavily, so that's why I'm saying keep your eyes on this index right now. Let's see how all this is going to play out, but yeah, for now it's not really looking good here for the Shanghai Composite here. So yep, we'll keep an eye on that one, guys. So now then, jumping into another index, and this one is the German DAX. Yesterday the index closed below this 12,913 zone. Well, what I was saying that yesterday, that and this whole week basically, that we need to see a nice good break above this, above that barrier, above this highest point of June. We did get that break. We did also get a fractional close above that level, but as you can see, it wasn't enough really for the bulls to kind of jump in more, so that more of them would jump in higher. But yeah, for now, looking at it's a little bit tricky here. For now, the cash index is currently balancing near the 12,910 territory, so basically very close to this level, to this highest point of June, but still fractionally below it. Now again, let's see how today is going to go ahead, but if we do get a nice strong move above it, then yes, higher levels could be met. We could start aiming for the 13,236 territory or the 13,500 level. So keep your eyes on that one, guys. Now jumping into gold very quickly. So this is what I was talking about this whole week, and gold finally managed to get a daily close below this upside line, which now kind of creates this slightly bearish atmosphere here. Don't get me wrong, I mean, we're not gonna drag this one drastically to the downside, but the fact that we managed to get a daily candle kind of closing below this upside line, now this is raising a few concerns here for gold to move higher. This week, as you can see, it struggled to overcome the high of last week near the 1818 level, and yep, yesterday we had this one drifting to the downside. However, it still stayed above this 1795 territory, which is the highest point of 2012. So it's currently acting as a good area of support, but in a way, if it starts dropping below it, then, well, I mean, lower levels could be met, guys. So keep this in mind. For now, be very careful. Let's see how this is going to play out. The upside scenario still remains the same for us on a break of the 1818 level, but if it doesn't go there and starts moving below the 1795 zone, then yes, lower levels could be met here, guys, so be very careful. And by the way, initially we'll target the 1789 zone and the 1763 territory right here, and slightly below that we do have that 1748 territory. So again, keep your eyes on these levels. And now jumping into Ethereum, quick update here. So Ethereum managed to close also below its upside support line, taken from the low of the 13th of March. So that's kind of great news for the sellers. In addition to that, it closed below this 235 territory, and now it kind of increases its chances of drifting lower. Now, don't get me wrong, I mean, still this upside line has been seen as a tentative one, and I've mentioned this before, so that's why we'll be very careful still. And the only kind of thing supporting really the kind of the downside here is, of course, yes, this break of this upside line, a drop below this key support level near the 235 zone, and a close below the 21-day EMA. So let's see if the bears can actually kind of get something out of this and drive this one lower. If they can, then the next target for us is the 216 zone, marked by the lowest point of June. So keep your eyes on that one. In terms of the upside, still the same idea remains. We need to see a pop above the 253 territory, 253.5 to be a little bit more precise. Then yes, higher levels could be met. This would confirm a forthcoming higher high, and more buyers could be joining in here. Jumping into a few pairs very quickly, so AUD USD. So here, now previously I looked at in the beginning of this week, I looked at this level right here, the 1.0662 territory. Now what I was saying, that if we get a break of this downside line here, taken from the high of the 2nd of June, and we also get a nice break and a daily close above this 1.0662, then yes, in a way we could look at some higher levels. And yes, we got a nice push and we got a nice daily close. However, then on Tuesday, kind of on Wednesday, the pair reversed back down. It got a hold up near this 21-day EMA, from where the pair kind of is now seen reversing back to the upside. Now let me just quickly adjust this level. Probably this is a little bit of a have to admit, maybe this one was a little bit too low level, because what we're going to do here is we're going to keep an eye on this little area right here near the 1.0675 zone. That could be a little bit of a better level to watch, because it acted as a fantastic area of support here back on the 25th and 26th of June. In addition to that, it acted as a good area of resistance on the 2nd of July, and this week it's acting also as a good area of resistance, although we're getting these overshoots, but we're not getting a daily close above it. So that's why ideally a daily close above this area, above the 1.0675 territory, could maybe bring more buyers into the game here, and we could see this one pushing further north. So basically, like I said, I've adjusted this level a little bit, because that one probably was a little bit on the probably too a little bit on the too tentative side, I would say, like this. But again, like I said, we'll keep an eye on this one. A nice good pop above this could open the door towards some higher levels, because as you can see, this week the barrier is acting as a good area of resistance, although we are getting these overshoots, but still we're not getting that daily close. So a nice good daily close above that level could do the trick for more buyers. Now jumping into USDCAD very quickly here, the pair continues to move sideways this week, and this is what I was talking about yesterday, basically, in my morning video, and I was telling you guys to keep a close eye on this little range here, roughly between the 1.3488 and 1.3624 zones. You can see that also what I was saying, that even though we had a decline here on Wednesday, what I was saying, that be very careful, because we might be getting something similar as we had here, for example, on the 8th and 9th of July, which is basically the same thing, where it had a nice decline, strong decline on the 8th of July, came close to this 1.3488 zone, but then the next day sharply reversed higher and kind of pushed towards this 1.3624 level. Now the pair is basically climbing again higher. It's currently stuck near its EMAs here, near the 21-day EMA and the 200-day EMA. But in order for us, as I mentioned previously, in order for us to aim for slightly higher levels, we would prefer to see a push at least above the 1.3624 zone, and then, yep, like I said, aim for those slightly higher levels. But again, be very careful then still, because we do have this downside line taken from the high of the 31st of March, which could provide a bit of resistance. Jumping into EURCHF. Now here the pair has had a fantastic rally to the upside. On Monday we managed to break this this falling wedge formation, so everything kind of worked out according to all the TA rules. We had a nice push higher. Yes, it drifted north. It overcame the 200-day EMA because initially in the beginning of this week I was telling you guys that we were going to aim for the 200-day EMA first, and then we'll see how it's going to behave there. But as you can see, it comfortably overcame that level. On yesterday, the pair drifted higher and found resistance near this level, near the 1.0797 territory, and then kind of corrected lower. In a way, there is a chance for this one still to correct a little bit further to the downside, maybe towards this 200-day EMA, and if it finds good support here, then we could see this one curving back to the upside and pushing maybe higher towards the highest point of June. But for those who are more on the cautious side, you could just wait for a break above the current highest point of this week near the 1.0797 and then aim for some higher levels. If we draw a Fibonacci here just to see where approximately this could retrace to and where it's currently sitting at, you can see that, for example, the retracement of the 23.6% here happened already yesterday. So in a way, this 200-day EMA could be also seen as a good area, good potential area for test, because it's in between the 23.6% and the 38.2%. So sometimes instruments do like to test areas like that. So basically, kind of this way, there's more traders that could get wiped out because, again, a lot of people then probably believe that it could travel further towards the 0.3820 so towards the 38.2% retracement, and then yep, it starts reversing sharply to the upside, and yep, a lot of traders get wiped out this way. So that's why be very careful. For now, yes, if we do see a drop below this 23.6% retracement, then we'll aim for that 200-day EMA, and then we'll take it from there, because again, we don't want to we want to be on the safe side. And finally, EURUSD. So I talked about this one yesterday as well, and I was telling you guys to keep a close eye on this one and keep your eyes on the highest point of June, which is roughly around the 1.1422. As you can see, the barrier kind of continued to provide strong resistance, although we did get some overshoots, but we didn't really get a break above it. And well, we did get a break above it, but we didn't really get a daily close above it. So yep, the pair drifted back down. And what I was saying yesterday, that even if we do see something like this, another false breakout, still there is a possibility for this one to move lower, and still there is a possibility for the buyers to step in somewhere near this upside line, because in a way we can say that as long as this upside line stays intact, the buyers could still remain active. They might just take advantage of the lower rate here, somewhere around here, and then push the pair higher. If you're more on the cautious side, wait for that daily close above this 1.1422 territory, and then we could aim for that highest point of March, and at the same time the current highest point of this year near the 1.1496 level. So keep your eyes on that one. If this upside line gets broken and the pair starts falling below the 1.1296 territory, now this is where more sellers could be joining in, because at the same time the rate would be placed below the 21-day EMA. And of course we would like to see a daily close here below this area first before getting comfortable with larger extensions to the downside. For example, here on a break of this upside line. But yeah, we could start looking already to some lower levels if we get a drop below the 1.1296 zone. So keep your eyes on that one. Now guys, I hope you found it useful, and thank you very much for watching and listening. If you want to catch my video later on, my traders tea time is always 13:15 GMT. I'll have a look at some of these instruments, some new ones of course, and yeah, we'll take it from there. But I hope you stay safe guys, stay safe both health wise and market wise, and have a wonderful trading day. Thank you very much, and bye bye.